Hi, this is Matthew Cratter from Trader University, and today I want to talk about Bitcoin for beginners. If you're interested in Bitcoin, other crypto, momentum stocks, Warren Buffett, or just want to see what I'm trading these days, be sure to hit that subscribe button. So, why should one be interested in Bitcoin? It seems like a very strange new technology. Well, let me give you just some hard numbers. Right now, as I'm recording this, Bitcoin is trading for about $7,000 US dollars per Bitcoin. And if you ever want to find out the price of Bitcoin, you can just go to Google, type in Bitcoin price, and this will come up. So about $7,000 per Bitcoin. Where do I think Bitcoin is going in the coming years? Now, again, everything I'm saying here, none of this is investment advice, but you should know that I own a lot of Bitcoin. So if Bitcoin's currently at about $7,000, where do I think it's going in the coming years? And why is it such an exciting investment opportunity? By the end of 2021, the model, which I'm going to show you, says that each Bitcoin should be worth $100,000. So you invest at $7,000 now, it becomes $100,000, perhaps by the end of 2020, but certainly by the end of 2021, if the model holds. 2024, each Bitcoin at about $400,000 per Bitcoin. 2028, somewhere around $3 million per Bitcoin. So this is a chance to make 100 times your money, 200 times your money, maybe even 300 times your money. It's the best investment that I know of right now. Again, it's risky. This isn't investment advice. If you want to learn more about these price targets, I would refer you to Stefan Livera's podcast here, which I'll link to. A good guy to follow on Twitter is Plan B, and he has an excellent paper on how to model Bitcoin's value based on its scarcity. Now, this is the paper that I use to get those price targets. Now, this all sounds too good to be true, doesn't it? And so the immediate response is when you talk about Bitcoin and you start throwing around crazy numbers like this, is that, oh, Bitcoin is a Ponzi scheme. It's a pyramid scheme. Now, it's none of these simply because it's not a centralized thing. It's not run by a corporation. It's not a Bernie Madoff fund. It's not a multi-level marketing thing where the first people get paid out by later people. But a lot of people just think that Bitcoin is a bubble. Now, the strange thing about this bubble is it's lasted since 2009, since the invention of Bitcoin. And people have been saying that Bitcoin is in a bubble since it was trading at 5 cents, 10 cents, $10, $5,000, etc. A lot of people compare it to the tulip bubble. The difference between Bitcoin and a tulip bubble is it's very easy to grow a lot of tulips. Bitcoin, as we'll see, is a very, very scarce asset. Now, a lot of people don't realize in investing that if you do the safe thing and you invest in what everyone understands. So right now, Apple is obviously a great company. They make great products. Everyone loves them. But the real opportunity to make a lot of money in Apple is long, long gone. You have to invest in things that are ahead of the curve. Wayne Gretzky's famous for saying, how did he get so good? Well, he skates to where the puck is going to be rather than to where the puck is right now. So when you're investing and you're thinking about long-term investments, if you invest in the safe thing, you might make a little bit of money. Apple's probably a decent long-term investment. But to make the really big money, you have to be ahead of the curve and you have to invest in some really weird things. Now, I'm old enough to remember how controversial the internet was in the mid to late 90s. Here's a famous Newsweek article from 1995 talking about how the internet's going to fail, how it will never scale. Lots of articles, if you go back, you can see how people, lots of very smart economists, lots of smart technologists said, well, people are never going to shop online. It's very inconvenient. The internet will crash. It will never scale, etc. But for those who understood its potential, there was really just a gigantic amount of money to be made. And those who poo-pooed the internet really missed out. They missed out on Facebook and Apple and Google and Netflix and Amazon and all these companies. And you've probably heard people over the past 20 years, at least I have, saying that Amazon's in a bubble. The bubble's going to burst soon. The company doesn't make any money. People who say these things about Amazon don't know how to read an income statement, and they don't realize, or a cash flow statement, they don't realize how much Amazon was reinvesting its money so it wouldn't have to pay taxes on it. But this is where Bitcoin is. So if you're someone who missed out on internet stocks, you missed out on Google or Facebook or Apple, or Amazon, I would encourage you to take a look at Bitcoin. It's a risky investment. It might not work out, but it's weird enough and new enough and an interesting enough technology to have some really, really big upside. And I think the best analogy for Bitcoin at this point is that it is digital gold. It's a store of value. Now, what exactly is a store of value? Well, a store of value is a place where you put your money if you want to preserve its purchasing power. So, for example, when I was a kid, a Big Mac was something like 40 or 50 cents in the early 70s. And now a Big Mac is $5, $6, $7, $8, depending where you are in the world. And so if you took that 50 cents and you stuck it under your mattress, or even if you put it in T-bills or a savings account, and you wanted to pass on your wealth, that 50 cents, to your future self or to your grandchildren and say, here's 50 cents, I want you to be able to buy a Big Mac whenever you want, that strategy failed simply because the US dollar and all fiat currencies, all paper money like the US dollar, the euro, the yen, the Australian dollar, Canadian dollar, these fiat currencies, they're not backed by anything. They're just paper. And they lose their purchasing power over time. In fact, they lose a lot of purchasing power over time. They lose probably, in the past, the US dollar's lost about 2% a year, probably losing a lot more than that now for reasons we'll see. But if you lose 2% a year, so you work really hard, you put your cash in a savings account, you don't want to invest in risky things, but it's naturally being eaten up by inflation and by central bank money printing. So if you're losing 2% a year on your savings, and you don't think you're losing 2% a year because maybe you're earning a little bit of interest income, but if you're losing 2% a year on your savings account, after 20 years, your wealth has gone down by 40% roughly, just 2% times 20 years. And so that's why you can't store money in a mattress. You can't even store it in a savings account. You won't keep up with inflation. And people are forced into riskier assets, unfortunately, because of this system. People are forced to buy real estate. This is why everyone tells you to invest in stocks, in your retirement account. And these strategies do work. But the problem is it's very nauseating having a lot of wealth in real estate or stocks, especially stocks. You've been watching them move up and down 50 or 100%. So this is the problem that Bitcoin solves. And it appears that it's beginning to function as a store of value. It's a very volatile store of value. It moves around even more than stocks. But if you wait for it not to be volatile, if you wait for it to no longer be volatile, it's going to be at a much higher price. In the same way that Amazon or Apple, when they were young IPOs, their stocks were incredibly volatile. Amazon would regularly go down 50, 60, 70, 80, 90%. And so now it doesn't move around quite as much. Something like Apple or Microsoft moves around even less. That's because the volatility's gone, the uncertainty's gone, the investment, the real returns have been made. And so if you're willing to, if you're going to own Bitcoin, you have to be willing to watch it move around a lot, or it's better not to watch it. But if you wait for it to become less volatile than it is now, you will miss out. So Bitcoin seems to be a good store of value, which is one of the functions of money. It is not yet a perfect medium of exchange. A medium of exchange just means I can take my US dollars and I can buy corn with them. I can buy a computer with them. They're accepted everywhere. Bitcoin is obviously not accepted everywhere. But I think in the coming years, it will be accepted by a lot more merchants. It'll be accepted online by Amazon. And Bitcoin is a lot like a stock. You can't go to the grocery store and buy groceries with your Apple stock. You first need to sell your Apple stock, convert it to US dollars, and spend it that way. Use it to buy groceries. Same way with gold. They don't accept gold at the grocery store or a lot of online stores. But you can always convert it to fiat money, to US dollars or euros, and then spend it that way. That's money as a medium of exchange, where people exchange goods using this intermediary product called money. I'm going to be talking about Bitcoin as a store of value, which I think is more fundamental than as a medium of exchange. So this is a way of passing on wealth, whether it's a small amount of wealth or a large amount of wealth, it doesn't matter. Passing on wealth to your descendants or even to your future self, because you don't want to have that 50 cents under your mattress and then 20 years from now, you can only buy a tenth of a Big Mac hamburger instead of a full Big Mac hamburger. Now, why does the value of the US dollar continually go down? Well, it goes down because the Fed, which is the US central bank, is constantly printing more money, especially during a crisis like we're having now with this virus and the huge economic slowdown and recession. The Fed has to print a lot of money. But when the Fed prints more dollars, it devalues the dollars that are in your pocket, that are in your savings account. And it's a way that the government actually picks your pocket. And it's not just the US government. All the world governments print a lot of money. And they can print it because it doesn't cost them anything to print money. The US dollar and all the world currencies, the yen, the euro, etc., none of them, the renminbi, the yuan, none of them are backed by gold anymore. They're just paper. And the government can print as many of them as they want to. They can print dollars and use them to bail out hedge funds, to bail out big companies, or even to send you a check for $1,200 if you're in the US. But what they're doing is they're really devaluing your accumulated wealth by doing this. And this is why you need a store of value. You can look here, you can look at the Fed's balance sheet. Basically, they print money, they buy lots of stuff, and they buy securities like muni bonds, treasuries, even bond ETFs. You can see how the Fed's balance sheet has risen since the year 2000. It's just gone from under $1 trillion of assets being held on their balance sheet to close to $6 trillion. And a lot of that has just happened, you can see, since the beginning of 2020. Now, how do they pay for these assets? How do they get the money to buy these assets? Well, it's very easy. They just print it. This is just an unbelievable system we have here. A lot of people don't realize this is how it works, but this is how it works. They don't actually need your taxes. The amount of taxes collected do not cover government expenditures or everything that the Fed is buying. So they just print money. And this is why we need a store of value. The more money they print, the higher gold prices will go, and the higher Bitcoin prices will go as well. So who invented Bitcoin? I'll just do a brief amount of history here. Satoshi Nakamoto is the legendary creator of Bitcoin. He developed it in 2009. He published a white paper. We do not know who Satoshi Nakamoto is. He's sort of a legendary figure, like Perseus or Hercules at this point. He's obviously a guy who knew a lot about math, a lot about cryptography. He was a guy who very much understood economics. And one of his explicit reasons for coming out with Bitcoin is he did not like the bank bailouts of 2008 and 2009. And he actually mentions this when he releases Bitcoin. But Satoshi Nakamoto is anonymous. It could be a man, it could be a woman, it could be a bunch of people. So these are not actually pictures of him. No one knows who he is, which is probably a good thing, as we'll see, because Bitcoin is completely decentralized. There's no one you can exert pressure on. If Satoshi Nakamoto was really well known, perhaps the U.S. government could put him in jail and threaten to break his legs or something like that. But no one knows who Satoshi Nakamoto is. But one thing we do know is that he, she, or they is a very wealthy individual. So I should rewind and say, when Satoshi invented Bitcoin, he created a fixed supply. So they're only, in the history of the world, from this point going forward, there are never going to be more than 21 million Bitcoins. And so Bitcoin is actually rarer than gold. There's a lot of gold deep in the earth. There's gold in outer space that Elon Musk and Jeff Bezos, they're trying to lasso comets and meteors and bring them home, asteroids. And so the ultimate supply of gold in the world is a quite rare precious metal, as you know, but it's not as rare as Bitcoin. Bitcoin is rare. It's built into the code, and there's nothing anyone can do about that. So there are only going to be 21 million Bitcoins ever made. This is why it functions as a store of value and as a form of digital gold. Now, to get back to Satoshi Nakamoto, one thing we do know about him is that he kept 1 million Bitcoins for himself. Now, these Bitcoins have never been sold. They've never been moved. But the interesting thing about them is they make Satoshi, whoever he, she, they is, one of the richest individuals or groups in the world. At current market prices, this 1 million Bitcoins is worth about $7.1 billion. And again, Satoshi Probably sort of an academic type, not interested in spending.